Today, we will talk about how to roll over an IRA. Let's have a look at the details. An individual retirement account, IRA, gives you a way to invest for retirement that isn't tied to a particular employer, like a 401k would be. But what if you want to move the assets in your IRA to another broker or a different type of retirement plan? This is called a rollover and is usually pretty easy to do. Here, we've pulled together answers to some of your most common questions on how to roll over an IRA. How does an IRA rollover work? A rollover allows you to move the assets in an IRA to another account. You can keep the assets as they are and move them into an account with another broker or liquidate the assets currently in your IRA. If you liquidate your assets, your broker will write a check for the total you deposit that check into your new account. Why would you want to roll over an IRA? The main benefit of an IRA rollover is account consolidation. Having all of your retirement savings in one place makes it easier to manage. If you're rolling over your IRA into a 401k, you can take advantage of better investment choices at a lower cost. Money in a 401k also enjoys greater protection from legal judgments. Can you roll over a Roth IRA into a traditional IRA? No, as of 2018, you can't roll over a Roth IRA into a pre-tax retirement account. A Roth IRA uses after-tax dollars, meaning you don't have to pay taxes on any distributions when you retire. With a traditional IRA, you contribute pre-tax money and then pay taxes on the distributions when you retire. The 2018 Tax Cut and Jobs Act banned conversions from Roth IRAs to retirement accounts seeded with pre-tax money. How do you set up a rollover? Tell your broker that you want to roll over your account. If you've already picked your new broker, you can give your old broker that information and they'll send a check directly to your new broker. They might also transfer the assets directly without liquidating them. How much does it cost to roll over an IRA? Your broker might charge a fee depending on the assets in your IRA. If you transfer your assets to another broker's account, your original broker might charge you a transfer fee. Similarly, you may have to pay fees and commissions if you liquidate your assets and transfer cash. What types of new accounts can you use for a rollover? You have to roll over your IRA into a similar retirement account. You can move the funds from your IRA into any type of account you want, including an investment or savings account. However, that transfer doesn't count as a rollover for tax purposes unless it's moved to a retirement account. How long do you have to complete your rollover? You have 60 days to deposit your funds in your new account. This deadline applies if your broker liquidates the assets in your IRA and cuts you a check. If you don't deposit it in your new account within 60 days, it's considered taxable income. You'll also have to pay an additional 10% penalty for an early withdrawal. What if you miss the 60-day deadline? You can apply for a waiver if you miss the deadline. If your broker cuts you a check and you don't deposit it into a new account within 60 days, you would owe taxes and a 10% penalty on the total amount. However, you can apply for a waiver that would give you up to a year from the date on the check to deposit the funds. Do you need to report the rollover on your taxes? You might, depending on the circumstances and type of account. Go to Government IRS website to determine for sure if you need to report the rollover. Generally, you won't owe any taxes if you roll over the total funds to the same type of account and complete the rollover within 60 days. Can you transfer your IRA to another broker? Yes, you can transfer the assets in your IRA to another broker. With a transfer, you keep all the same assets and the same IRA plan. The only thing that changes is the financial institution that holds those assets. What's the difference between a rollover and a transfer? A transfer doesn't involve liquidating assets and isn't reportable. When you transfer your account from one broker to another, all that changes is the name of the financial institution holding the assets. The original assets aren't liquidated, so you don't have to worry about depositing a check with your new broker. Can you switch your IRA holdings to cash? Yes, and you won't incur any tax penalties if you don't make any withdrawals. If the markets are taking a severe downturn and you want to cut your losses, talk to your broker about doing a reallocation or rebalancing of your IRA portfolio. Let them know that you want to convert a portion of the assets to cash. Thanks for watching this video. Please don't forget to like and subscribe to our channel if you like our videos.